Good morning, Paul Georgie from Allendale. It's June 7th, Thursday morning, and first of all, we just got the weekly export sales numbers from USDA. Trade was looking for 450 to 750,000 tons of corn sold. Came in at 398, well below the low end of the range. Very weak sales also on soybeans. Total of 495 was the total. They were looking for 600 to 800. And in wheat, 196 is all we sold in wheat compared to a trade estimate of 400 to 500. So very weak sales there, and we'll see how the market reacts. It hasn't reacted much right off of the initial announcement. However, there's other news that is being talked about this morning. One of the primary reasons for the strength that we've seen this morning is the Chinese surprised everybody here about 5 o'clock this morning with a cut in their interest rate of 0.25 basis points. That has provided some support and weakness to the dollar. Spain also came out announcing they had a good bond auction and good bond sales here overnight, which is supporting the euro. And it seems like any news that's remotely positive for the euro is considered as hopium that we've got this euro situation solved. And that's what we're seeing yesterday. What we see today is the strength in the euro, therefore putting pressure on the dollar. The Argentina farmers that have went to a national strike on selling grains is in the second day, and that is slowing down movement and potential shipments of grain out of Argentina. That is giving reason for strength in the soybeans, especially that the idea that China will need more beans, and that's where we're getting why we're getting some of the strength here in the soybean market for the last couple days. Also, there was a story out yesterday and being talked more this morning that Brazil will likely stop exporting beans or selling beans, not necessarily exporting. I don't think they're going to stop their shipments. They'll still sell or ship out the amount that they've got sold. They may not have any more to sell or be as aggressive about selling after the 1st of July is what the story is. The other big news is weather. The conflict between the GFS models and the European models are still there about the amount of rain that the Midwest is going to get next week and thereafter. And NOAA came out with their numbers and their maps here this morning on the 6 to 10 day and the 5 to 6 day maps, increasing moisture for the Midwest over what they had yesterday. So that could be construed as a little bit negative to markets, but I think the real test is we're living day to day here and week to week or shower to shower as far as the crop conditions go. The only advantage that we have is that the mornings are cool and the plant does have a time to regain some of its growth here. As far as the stress goes, we'll continue to see stress in the plants in the afternoons and until we get some rain, and hopefully this rain will come this weekend. We think that this weekend's rain is going to be an early next week, actually, is when the rain is forecasted. If that rain event turns out to be a dud, I think you will have a whole different perspective of where this grain market can go here in the short term. The dollar is having a huge effect on it here this morning, providing underlying support as well. Farmer selling is at a standstill in the corn and soybean markets as basis on beans and corn strengthened yesterday in the domestic market. CIF markets went up slightly, and you can see why, because the export demand has really slowed up here. And we've also got the USDA report on Tuesday morning, which is right now being talked about as being bullish, lesser corn ending stocks, lesser bean ending stocks. So those are a lot of bullish factors and positive factors that we get to talk about here today. In the livestock trade, we still got a standoff in the cash market. The bids are anywhere from $2 to $3 lower. The asking prices are $2 to $3 higher in the south, around that 121 area, which would be steady with last week. The cutout values, choice was up 73, select down 38. The pork cutout values put in a strong performance yesterday at 175. We also had the hog index increase $2.88 yesterday. And I think this is the real key is, can we get the cash market to catch up with the futures? Right now we've got about a $6.50 difference between the cash index and the June futures contract. They go off the board on June 14th, next Thursday, so we've got a week of trading before the June contracts expires, and we should see the futures and the cash index move together into that closing time frame. So we've got a lot of things to watch here today, a lot of things to talk about. Give us a call at 800-262-7538. We wish everybody a very successful trading day, and I'll talk to you tomorrow morning. Thank you.